Hello and welcome again on Stocks Advisors channel. In today's episode, we will talk about two companies. First will be ExxonMobil Corporation, traded at New York Exchange, ticker name XOM, and second one will be GD.com Incorporated, traded at Nasdaq, ticker name GD. Well, first we will start with ExxonMobil. ExxonMobil today did show a nice white candle with big upward shadow, which in general is kind of bearish momentarily, but overall the situation, the chart are very bullish. So let's do a quick analysis here. As always, at our daily charts we have three moving averages depicted. These are moving average 20, 50 and 200, being green, blue and red line correspondingly. Here on the left you see their legend. So what's important to see here, that finally looks like we have a reversal of XOM with confirmation of it. So if you look, previously we had this very long decline. At least the last phase of it lasted from August until actually beginning of October, and then we had this one wave price action and then second wave price action before really the moving average 20 started to bend. And now when it started to bend, we see very nice wavy with steps upwards behavior and now a little bit stabilization. And by that stabilization time also we see that moving average 200, the red line, started to bend upwards together with all others. So now all three lines, all three moving averages are bending upwards. And what is very remarkable here is that the volume itself did not change that much. So it's real action, not just colored or caused by volume, because sometimes bending of moving averages could be just explained by volume effect, and then it's not that strong. And when it's with the same volume, it's a very strong indication. So overall we can say that we have finally move, and expectations for ExxonMobil are very good technically speaking. Also, if you look RSI wise, we're starting again upwards, trying to face them overbought area strongly. MACD wise, it's very bullish because we have during being last 2 weeks steady sitting at between 41-42 channel. We formed a very nice shape of downwards MACD histogram, and now it's ready to pierce upwards with very bullish momentum. And although we have this let's say a bit upwards shadow here, so this could mean we still might touch moving average 20 slightly, but then it's expected to rebound. So with this having said, we can develop our strategy. Of course, it's immediately a buy in the size of the current candle, and then just sitting and waiting for let's say for next wave, right? Because after having the first wave that we saw here starting from November and actually finishing now, it looks like we will continue the trend. So we need to catch up with this trend line T1, and then it should go higher again. If we will, instead of that, we will face some slight correction, of course this is also possible, then no problem, because we will have very, very strong, extremely strong support line technically speaking at these levels. And then you can just buy there to average down. First time it will be S1, S2 line. There will be two moving averages here going upwards, moving average 20, moving average 50 and 200, making it very strong double support. And again, should the price decline again, which would be possible only with some negative catalyst, then of course we need to be prepared for very deep support, for very deep average down. Then this would be that area of average down lines advised, and these would be S3, S4, not at all expected, but as always we discuss it at our channel to average down. So this would be technically speaking the last very strong support. But most probably, even if we do any correction, it will be till the S1, S2 level, and then we should start further. And here it's advised to buy with 1-2 strategy, meaning that funds you would like to play here, you can split in 5, then you will buy in one portion already, and then with 2 portions at the first average down, and again with 2 portions at the second average down, according to the entry levels discussed here and marked with dark circles. This way it will be the best optimization of profit versus loss, and actually for ExxonMobil quite nice move here, quite nice action, even if we have some corrective move downwards. But overall moving averages are preparing to go up and to form so-called later, of course, until while moving average 50 will make a magic cross up with moving average 200, so hit it from the bottom. Then we will create so-called 20, 50, 200 pattern when all three moving averages will be aligned like this, and then it will start the real growth and real recovery for ExxonMobil, because until this will be true later, the company will be growing stably with mid and long-term traders. So just wait for it. It's coming. One wave maybe downwards for correction, then some should be very good to grow further. So keep watching on it, and don't be too greedy. Enter wisely, average down wisely. It should be very nice to trade. So this was all for ExxonMobil at the moment. Overall very bullish, and although some volatility is possible. And now we will go to the second stock of today. This is GD.com, traded at Nasdaq, ticker name GD. Again, as always, this is a daily chart, and we have three moving averages depicted. Moving average 20, 50, and 200 being green, blue, and red line correspondingly. And here immediately what we need to note is that it's so-called parallel move when a moving average 200 is much lower, creating this big gap that could be sometimes a bad thing because it could cause strong correction moves, and other two moving averages 20 and 50 are just going around each other, making sometimes this magic cross up and down here and there, but then dragging the price together. So it's kind of a parallel shift or shift move we can have here. And indeed today we see very big white candle, also let's say associated with a lot of volume traded. So although it creates very accelerative momentum, but we need to be careful here because it could be also kind of still indication for some smaller maybe move later and then correction starting, because this wave can break. We see this is kind of with sharpy waves it goes, so it could break anytime. And if you're a short-term trader, it's maybe wise to wait a little bit, because if you look more carefully here, you could see this kind of channel, although not that strong, formed here. So it still would be maybe way to go up or spike at that level, but still need to be very careful here with R1. But overall, the best opportunity to enter here the first time would be actually at these levels. So anything between 90 and 92 may be the nice first entry, because also it could be very volatile tomorrow. So S1, S2 would be the first entry for this stock. But then overall we need to be prepared. Either it will be immediate next let's say spike here, and then we need to wait until R1. If not, if further correction take place, of course we could also have let's say have to be prepared for stronger correction, because here what could form is so-called delayed magic cross up. So you see here moving average 20 is approaching moving average 50 from the bottom. So once they cross each other, it could be a situation like this when moving average 20 will hit from the top. So this is called magic cross up. But the problem is that this magic cross up already will take place on the price action, which is high. So price action already did grow up, meaning that this would be a delayed magic cross, and delayed magic cross could be either a decelerator of the action or bearish if it's magic cross up. And this could coincide with being at the vicinity of R1 level, so it could be very strong move back and starting some correction move. If this will be taking place, well, no worries, we just need to wait, let's say, and average down wisely. Then of course here's a visible and obvious level to do next average down. Of course would be in this vicinity. It's this volatility level and support line, so this would be then S3V1 as a second average down in case of price further decline. And then only the bad negative catalyst can drive the price lower, and if this will be happening, no one is, let's say, protected from news coming in, then we really need to be prepared for some stronger action, for stronger, let's say, moves. And if this is going to happen, then we will just need to wait for these levels to average down. Last time, not at all given, not at all expected, but as always we discuss the very bad situation here as well. And that time it will be again double support, because moving average 200 will move here by that time. Will be very good to play with. So it's advised to play here again with 1, 2, 2. The most common advice we do but we also give other strategies. It means that the funds you would like to play here, you can split in 5, then you can buy with 1 portion in the first circle. In case of the price decline, you can average down first time with 2 portions in the second circle, and again, if needed, second time with 2 portions in the last circle, according to entry levels discussed here, and actually given within these channels and circles. This trade will be the best optimization of profit versus loss, and then each time you rebound, you can wait either until the vicinity of next or previous actually circle, or just up to 10% plus. It's more than good to sell. Don't be too greedy, don't wait too long, rather sell at 10% profit, then check other videos. We have a lot of those posting every day, so you can find appropriate stock and make the trade again. So be consistent with positive trading rather than trying to become rich from one trade. This is usually a recipe for disaster, and one of the reasons why mainly beginning traders fail in the first year of their trade experience, let's say. So with this having said, that's all for today's 2 stock, ExxonMobil and GD.com. Good luck with those, and see you at another episode of Stocks Advisor channel.